Hi everyone, this is a technical analysis on gold. Let's start with some fundamental background first. Gold got stuck in a consolidation around the highs as a mix of geopolitical and macro drivers led to a range bound price action. Last week, Israel eventually decided to proceed with a limited retaliation against Iran. Iran downplayed their airstrikes, which could be a sign that they do not want to escalate things further. We might finally put that episode behind our backs. On the macro side, the real yields have risen notably in the past couple of weeks, which is generally a negative driver for the gold market. That was not the case this time, and it's not yet clear if it's just because of geopolitical fears or something else. If it was indeed just because of geopolitical fears, we might start to see the price rolling over, so the technical levels and the next data will be crucial to monitor. Now on the daily chart, we can see that gold got stuck in a consolidation just beneath the 2,400 level. From a risk management perspective, the buyers will have a much better risk-to-reward setup around this trend line, where they will also find the confluence of the 38.2% Fibonacci retracement level and the red 21 moving average. The sellers, on the other hand, will want to see the price breaking lower to increase the bearish bets and target a bigger drop into this next trend line around the 2,100 level. On the 4-hour chart, we can see that the price has been diverging with the MACD, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, it led to pullbacks into this minor black trend line, where the buyers kept on leaning onto to position for new higher highs. This morning, we got this breakout, so the chances for a drop into this major trend line increased. The sellers will start to pile in with a defined risk above the most recent highs to position for a fall into this trend line. The buyers, on the other hand, will want to see the price rising back above this minor trend line to position for a rally into a new all-time high. On the 1-hour chart, we can see that we had a strong resistance zone around the 2,400 level, where the price got rejected from several times last week, except this spike caused by the Israeli retaliation. We can see that we now have a minor downward trend line here, where we can also find the confluence of the red 21 moving average and the 61.8% Fibonacci retracement level. If we get a pullback from the current levels, we can expect the sellers to lean on this trend line to position for a drop into the major trend line with a better risk to reward setup. The buyers, on the other hand, will want to see the price breaking higher to invalidate the bearish setup and position for a rally into a new all-time high. This week is a bit empty on the data front with just a few notable releases. We begin tomorrow with the US PMIs. On Thursday, we get the US Q1 GDP and the latest US jobless claims figures. On Friday, we conclude the week with the US PCE report. Strong data is likely to weigh on gold, while weak figures should give it a boost.